It's a pleasure to welcome you back to this Q&A session that follows our recent webinar on Asia into Europe activity raising. I am joined by Tosh, that you can now see live, and Paul Bishop. So following the webinar, we received a few number of questions that we did not get a chance to address. So I'm going to take this opportunity to get at least a couple of them addressed by our speakers. So the first one, we did talk about some of this trend and which Asian economies were driving the trend. We covered China, we covered Japan. But in our slides, we were seeing a lot of activity as well from South Korea. We were seeing some level of activity from Malaysia. And the audience asked a lot about India as a region within Asia potentially influencing this trend. What are your findings, Tosh?
I think South Korea and Malaysia, you're absolutely right. There were some blips in the chart, but those also included corporate activities. And in case of South Korea, I think a lot of outbound acquisitions are driven by large chaebols, so the likes of LG, Samsung, Doosan, etc., doing very strategic acquisitions and not really as a financial investment. Malaysia is very much a state-controlled economy in a similar sense to Singapore. So they have a state-backed acquisition, but also some of the private acquisitions as well as divestitures have happened recently. We've also been involved in some of those. In terms of India, a very good point. The chart really didn't show any notable activity out of India, and I can echo that with my own experience of having 4 transactions which collapsed between signing and closing in 2008 as a Lehman hit the market. And since then, they've not really come back. Also, having said that, there are quite a lot of internal opportunities within India, and a lot of global investors are investing into India rather than the other way
India
around.
moving into Europe.
That's right.
Okay, thank you. So one of the things that we were discussing off camera was should we have China and Hong Kong together? Should they be separate? We went for separating the two, Paul. Give me a little bit of background behind that.
I think that's a reflection of obviously the different backgrounds within the region. So obviously Hong Kong has come from a very different perspective previously in terms of history. There's more market transparency there. The investor base is very different. It's much more international in terms of kind of the makeup in the market. And I think that really flows through to the strategies that are employed with the investments as well. So anything from you on that, Tosh?
Sure. I think we're going to start seeing Hong Kong more as an extension of mainland China, and the convergence is going to happen. So you're absolutely right in the different historical nature of the capital markets.
Yeah.
And there are still today some barriers to raising funds in mainland China, as well as more restriction on mainland China funds investing abroad, which doesn't exist in Hong Kong. But what we note recently is that a lot of mainland China-based private equity funds raising specific US dollar or other funds in in Hong Kong, circumventing the regulatory restriction and allowing them to more freely invest abroad.
Interesting.
So the markets are really emerging a lot more.
Absolutely, I think so.
So I guess maybe the audience can opine and let us know. Should we report China and Hong Kong together separately? Going into some of the questions about your practitioner experience, there were specific ones about what are the benefits of considering an Asian buyer. Our webinar is talking about this trend, and I'm sure that there were a lot of people in the audience figuring out, should I be reaching out, looking into that market?
Well, other than the price they pay, once you go through the pain of doing the deal with them, they actually, in most cases, turn out to be a very good owner and a buyer of the business. So they are very operationally focused. They care about growing the value of the investee company, and they retain management, which is a big plus for a lot of sort of businesses owned by private equity in Europe.
Yeah, indeed. And if we were to look at the kind of other side of the coin, any kind of major pitfalls that you can relate to when making deals with Asian buyers?
Sure, it's all to do with sort of when you're negotiating with Asians or Chinese or Japanese. Beware of a parallel meeting. So I've been in so many meetings where I speak the language of the other side, or my colleagues do. We come out from a meeting and you exchange note with a client, and people have very different interpretation as to what went on in that room. What's important is not to be over polite. So be aware of the differences in their cultural background and internal requirements, but be firm and polite. And do not sort of go into indirect insinuations, etc., and then just confuses things. So the worst thing that can happen is you overlook the fundamental flaw in the deal logic, and you carry on spending a lot of time and money, and then later on you find out that the deal could have never happened or should have never happened.
Got it. Okay, that's actually valuable insights. So before we wrap up the Q&A session, we got a couple of questions about it's the Middle East, an interesting region where Asian are going into. Is the Central Eastern Europe? So what this highlights to me is that we actually didn't cover within Europe what are the key areas that are receiving this Asian investment. Paul, I think you did a really quick data kind of review before this Q&A. Tell us, what have you found?
Well, certainly most of the investment is into Western Europe and Northern Europe, so that's areas like UK, Germany, France. If we look specifically at UK, Germany and France, we actually see that 31 billion euros of the 66 billion euros invested by private equity back into Europe since 2007 has gone to those locations. So it certainly is the more developed markets, definitely.
Got it. Would you agree?
No, I echo that entirely. In fact, three of the busiest teams in our M&A practice are in London, Frankfurt and Paris.
There you go.
And that's the same for dealing with Asian investors, and that's exactly where we see the actions today.
Okay, perfect. Well, thank you very much, Tosh. Thank you very much, Paul. And thank you, the audience, for having continued to send us a lot of Q&A through our session and join us in this very interesting trend discovery. Looking forward for our next issues. With my best regards, Silvina Aldeco Martinez.